right, we are back. I do not know that is the second time Facebook has kicked me out today. Their creator app didn't work, and their app literally just crashed. Their whole Facebook page, whole app just crashed. So welcome back. I'm sorry that I missed you guys, but for some reason, Facebook's app on their page, the whole thing just completely crashed. So I just went away. So my apology for leaving you. I would not leave you voluntarily. Early on into a stream like this, Facebook just for some reason shut down the whole page, but we are back. Okay. So to catch you back up, we're talking about revenue lending loans, okay? Not based on collateral, not based on credit. Ones you can get regardless of that, based only on your revenue. We talked about Fundbox, one of the easiest to qualify for lines of credit at creditsuite.com/Fundbox. Only a few months in business that you need, okay? And the AI is used to pull your bank accounts. We talked about On Deck, the biggest publicly owned company that's in this space, okay? Better loans with 600 scores. You can get a credit line with them as well. Okay, we talked about Cabbage as well. Cabbage is one of my personal favorites. You can get it approved with even no collateral or a personal guarantee, which is awesome, with as low as a 560 credit line, and they offer credit, or 560 FICO, they offer credit lines as well. Lighter Capital is now where we are. So 100,000 to 200,000 or 250,000, okay? They'll even go up to $1 million in financing, okay? So again, how much they lend depends on revenue. Now, they work with tech companies only, so you need not be profitable, but you need to be a tech company to be able to get approved, okay? And you're gonna need to have at least 10 clients or a year in business to get approved. So if you're in the tech industry, Lighter Capital might be the way for you. Now, SmartBiz, okay? So they offer SBA loans. Okay, 30,000 to 5 million. 5 million is common with SBA loans. So most people that work with SBA have that amount or that range of funding here. Okay, 6.75% to 9% APR. So low rates and long terms. This is what we like about SBA. SBA is longer terms. And in doing so, this is what keeps your payments really, really, really low. Okay, you need to have a 650 FICO score and 2 years in business to get approved, and 50,000 in annual revenues with no BKs or tax liens. You can go to smartbizloans.com or creditsuite.com/get funding. So listen, it has become easier than ever to start qualifying for SBA loans, okay, if you have the right source, and that's something that we can help you with as well. So why do you like SBA loans? Why do people like SBA loans? It's because of the term. So many people get hung up on interest rate. Do not ever get hung up on interest rate, and here's why. Interest rate you're going to pay on money, personal or business, is really dependent on your risk. If you don't like the rate, then change your risk. It has to do with your credit score and your time in business and how you manage your bank account and tax returns and all that stuff. So you can change that stuff to have better qualification terms, okay, to get better rates. But what you really care about is the term, how long the financing is for. I promise you that how long the financing for matters way more into the payment than the interest rate it does itself. And the interest rate's tax deductible. So what you and I care about is getting the longest term possible. Now, in most revenue lending loans we're talking about, 3 years is about the norm. 3-year term. Payments are pretty high. As you just saw here, we're talking about terms up to 25 years. Why does it matter? I'll give you an example. We saw an SBA loan or a regular revenue lending loan for about $75,000 for a client. Okay, they got the terms on 3 years, and as a result of that, the payment was like $8,000, $9,000 a month. Now, we got them an SBA loan down the road for $325,000. Remember, they had $75,000. Their payments were about $9,000. $325,000. The payments were only $4,000, half as much. And they got, 4 times as much financing. 4 times as much financing and paid a payment half as much. That's what term will do for you. So when we look at sources here, like we're just looking at with SmartBiz, the nice thing with these kind of loans is this 10 to 25 year term. This will give you super low payments. And thanks for going crazy on the likes and loves, guys. I really, really, really appreciate that. Okay, lets me know I'm on the right track. It helps us get other people in here to share this with. Now, Blue Line is now our favorite line of credit here. 5,000 to 250,000. Okay, payback weekly in a 6-month term. Okay, or you can pay monthly for a 12-month term. So they let you pay weekly or monthly depending on how long you want to go to pay the money back. You can get approved in only 12 hours. This is what technology is now doing for us. okay, with a very, very, very low rate. So this is low rate financing without collateral, okay? Now you're gonna need about 6 months time in business and a 600 FICO score and $100,000 in annual revenue, but you can get approved for up to $150,000 line of credit. And that's bluevine.com, or again, we work with these sources, so you can go to creditsuite.com/get. So my two favorite credit lines, one is Fundbox, as I told you about. One of the easiest credit lines I've ever seen. Bluevine, not as easy to qualify, but it's easier than most credit lines, and you can get up to $150,000, and they pay it back over a year. Remember, Fundbox will give you up to $100,000 and give you 6 months to pay it back. Bluevine will give you up to 12 months to pay it back and will give you up to $150,000. What did I just tell you about term? The longer term you have to pay something back, the lower the payments typically are. So in this case, you want to get as long of a term as possible. Bluevine helps you get more, and they help you also be able to get a longer term, but it's not as easy to qualify for as Fundbox. So remember, when it comes down, and we just typed in the Fundbox link for you, when it comes to Fundbox, you really, really, really want to consider this as the very first line of credit you get, because it's so easy to be able to qualify and get approved. So creditsuite.com/Fundbox. All right, so let's look at GSD Capital. $200,000 to $1 million loan amounts, okay? They can fund up to 6 months of your monthly recurring revenue. Whatever your monthly recurring revenue is, they can finance about 6 times that amount. Important. I have a belief that every product you sell, you should also have a subscription product for, a recurring product. So for example, if you enroll with us to build business credit here, we have another subscription or monthly recurring product you can get that also allows you to take accounts you already have, like utilities, like even your cell phone, and add it to your business credit reports. So if you enroll with us as a partner, then we also have a $99 a month partner subscription that gives you all different kind of benefits. That's what I'm saying. For your business, if you want your business to be worth the most amount of money and make it easier to get funding, consider every product you sell to have a subscription. The other possibility is if you have a lot of subscription products, like for example, I used to own a credit improvement business and a lot of our clients paid $99 a month. So in that case, what you may want to do is you may then want to have a product that goes with the subscription. But for everything you do, you should have a product you sell and a recurring subscription amount that you have as an upsell that goes with it. Not only will that make your business a lot more valuable and create more stable income for the business, but it also opens up funding options with places like GSD Capital, where they're actually going to lend you 6 times the amount of your monthly recurring revenue. Okay, now they're going to get you an offer in about 7 days and funding in 30 days. So the longest of all of them, but again, look at their loan amounts here. $200,000 to $1 million. This is a larger loan amount. That's why it takes longer for you to actually be able to get financing. And again, this is good for SaaS companies, software as a service, okay, in some of these states, and I'll show you some of those states. Now, you need to have a business plan for growth to be able to get approved. So again, what's important here is this: SaaS companies, recurring revenue. And here's why this matters. It matters because what they're telling you is that recurring income matters a lot. You need to have regular, consistent, stable, consistent money coming into your business. And that's what subscription revenue will do for you. And when you have subscription revenue, then you're really, really, really rewarded, because places like this will lend you a lot more money as a result. Your business is worth a lot more money. So let's go ahead and do a quick summary here. So remember, when we talk about revenue lending, we're talking about you not needing collateral and not needing credit. And you don't need to give up a percentage of equity in your business like you do angel investing and venture capital. Okay, now the nice thing here is it's basically completely based on bank account management. If you manage your bank account responsibly, you're gonna find a source that will help you. Now, we talked about a lot of credit score requirements today, but if you go to creditsuite.com/funding, you should know that we absolutely have tons of options that have no credit score requirements that are revenue lending as well. You can get all the ones we talked about today, and you can also get ones that have no credit score requirements at creditsuite.com/get-funded. Now, the first one we talked about today was Fundbox, my personal favorite credit line, okay? Because you have 6 months to pay it back, rates are less than 5%, they use AI to get your bank statements using your login information, and you can get a line for $100,000, and they only have to be in business about 3 months or more to be able to get approved. One of the easiest credit lines I've ever found to get approved for at creditsuite.com/Fundbox. Okay, and Sista says, how much would Fundbox raise line of credit based on tax returns? Well, up to. So what I've personally found was this. Fundbox approves a lot of people under $10,000. $3 grand, $6 grand, $5 grand. Those are fairly easy to get. If you want to get 30,000 higher, I have found that if you supply your tax returns, then that will help get you there. If your tax returns are showing that you're generating some revenue, 100 grand, 200 grand, 300,000 in revenue, the more your revenue is, the more that credit line is going to go. So let's use us as an example. We got approved for 6,000 initially. We supply tax returns. They gave us 30. We backed off. We used it. We paid it back. We showed them some history. A few months later, we asked them for a bump. They bumped us from 30 to 100. They bumped us all the way up. So once our tax returns supported that we could provide or we could pay for that, and once we showed a history for them, then what they did was they bumped us from 30 to 100. But we went from 6 to 30 just by supplying the tax returns. And again, I just told a story earlier about one of my friends that did exactly the same thing. Had a credit repair industry or business, high risk industry, and still did exactly the same thing. 5,000-6,000 initial approval, tax returns got him up to 30,000. He bought what he needed to buy, paid it off, and he could reuse it. We use our Fundbox credit line all the time to take advantage of opportunities, to buy things that we normally wouldn't buy when opportunities arise. And that's what's really nice about credit lines. You only pay on what you're actually using. Okay, so great question. So we talked about On Deck, the biggest in the company, privately owned. Okay, they also offer loans and credit lines. They have a credit line that goes with the loan. They'll offer you a loan from 5 to 500. Then they'll offer you a credit line if your credit's above 600 and it's a lower risk scenario. They'll offer you a credit line to go with that. Okay, 9 months time in business, and they're going to want 75,000 in revenue to be able to get approved. Thanks for the likes and the loves, guys. We talked about Lighter Capital. Lighter Capital only deals with tech companies, okay? They'll go up to $1 million depending on the revenue. But again, you've got to be a tech company, and you've got to have a path to profitability here, and you've got to have some clients, at least 10 clients in one time in business over 1 year. We talked about Smart Biz as well. Okay, they do SBA loans. Longer term means lower payments, but you got to have 2 years time in business and a 650 FICO score to get approved. So a little bit more difficult to get approved, but fantastic terms. We talked about GSD Capital. This only really works if you're a software type company, software as a service. And again, if you have pretty good recurring revenue, because they're going to lend you 6 times the amount of monthly revenue. Now we talked about 2 of my other personal favorites. We talked about Cabbage here, one of the other easiest ones I've ever found to get approved for. 2,000 to 250,000, 6 or 12-month terms. Okay, they'll let you even pay monthly, but you've got to be in business 1 year and 50,000 in annual revenue. Remember, I talked about compensating factors. If you're strong in one area, like really good time in business, then you might be able to get past the lower revenue. If your revenue is really good, you might be able to get past something like time in business and a 560 FICO, so fairly low FICO to be able to get approved. And we talked about Bluevine, one of my other favorite credit lines, up to $150,000 credit line. They're going to want to see you have $100,000 in annual revenue in 6 months time in business. But again, they'll do a $150,000 credit line and give you 12 months to pay it back, which keeps your payments low. So is some of my favorite revenue lending financing options. There's tons of them I could show you. As a matter of fact, if you go to creditsuite.com/getfunding, we'll talk to you more about all kinds of revenue lending loans where you can get a loan and a credit line, or you don't have any credit score requirements, or the rates are much lower, or we can get you approved when you're in high risk industries. But those are some of my personal favorites. And why are they my favorites? Here's what I like, and here's why things become my favorites. Ease of approval. I just want them to approve the most amount of people that we can get approved, and I want them to give us reasonable terms based on risk. If they're approving those people in reasonable terms, I think it's a great source. Bluevine, Cabbage, Fundbox, those 3 are religiously doing those things. They're approving a lot of people that normally don't get approved elsewhere with really good terms. But remember, we work with over 1,000 lenders and every legitimate funding option. So go to creditsuite.com/getfunding, fill out like 5 questions. You'll talk to our finance team, and we'll talk to you about all the financing that you can get approved for. So remember, we are now on Facebook Mondays at 4 o'clock. We're going to change up our format a little bit. I'm not going to be carrying around the phone. We're going to have people helping. There's all kinds of things going on. And to give you an idea, here of the things to come. We're going to be talking about listing your business online in a way that makes you lendable. That's coming in the weeks to come. We're going to decode LexisNexis. I'm going to tell you everything you need to know. Who's using this data, how to get your report, what's actually on your report, and we're also talking about taking the guesswork out of funding. So we're going to talk about some more options and funding options for you as well, and exactly what it takes to get approved. So Candace says, oh, whoa, what are the funding companies for hair salons which don't have a lot of requirements? Well, again, remember, let's look at the formula. There's 3 ways to get approved for funding: cash flow, credit, or collateral. So Candace, when you say not a lot of requirements, you have to figure out what your strength is here. If your strength is that you have a 401k or an IRA or stocks, bonds, account receivables, any of these type of things, then you may be able to get approved based on that alone. If your strength is that your cash flow is good, meaning you manage your bank account responsibly, cash flow financing, like we talked about today, is a better option. If you have good personal credit or a guarantor that does, then credit-based financing is your best. If you have none of those, then we're building business credit, right? Business credit's the catch-all. By building your business credit, you're able to get high-limit credit even when you can't get other kinds of financing. And let me say, even when you can get other kind of financing, you still need to consider building business credit, because business credit determines how much you'll get approved for, the rates and terms you'll pay, and it also determines the terms that you're going to pay on that financing as well. So now I've given you options for every scenario. If you've got good credit, if you've got cash flow, if you've got collateral, if you have none of those, then we go to business credit. So tune in every Monday at 4 o'clock Eastern here on Facebook, almost every Monday. I'll be gone some weeks. Next week, I'll be at CreditCon in Las Vegas. I hope to see you there. Remember, if you'd like to get approved for funding, go to creditsuite.com/get funding, and I will be back in 2 weeks here on Facebook at 4 o'clock on Monday to dive more into ways that you can get money to grow your business. Thanks for tuning in. Thanks for sharing. Thanks for the likes. Thanks for the comments. Thanks for the questions. I really appreciate it. It means a lot. I will see you back here in 2 weeks at Facebook, Monday at 4 o'clock Eastern. Thanks, everybody. Have a great day.